The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Friday, the 30th of October 2020. On the podcast today, Andrew Prelea, Chief Executive Officer of Vast Resources, answers investor-submitted questions on their operations in Romania and Zimbabwe. Also on the podcast, Charles Bray, Executive Chairman of Eastinco Mining, talks about the new CEO appointment and provides a trading update for the quarter ended the 30th of September. And full-time investor and equity analyst Paul Hill talks about SourceBio International Lloyds banking group and why he's bullish at the moment. Plus, as always, at the end of the podcast, I have two lists for you, the top 5 most followed companies on Vox Markets in the last 24 hours and the top 5 most liked RNSs too. By the way, you can see top 10 versions of both these lists at voxmarkets.co.uk, where you see lots of other content. In fact, there's a video Paul did with SourceBio right there on the front page. First day of dealings. Check that out at voxmarkets.co.uk. There's also lots of other content there. Symphony Environmental, the Latin American partner, launches range of drinking straws, antimicrobial and biodegradable. Eastinco, there's an article there. Plus, don't forget, there's one by Intelligent Ultrasound. Said GE Swift Ultrasound has received FDA sales clearance, and that's their tech, of course. So big news there. And COVID-19 index, biggest riser today. Open Orphan, of course, good contract there from them, up 7% at 26.75. And biggest fall of the day is 4D Pharma. That's down 3% to 109. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Andrew Prelea, CEO of Vast Resources. VAST is a ticker there. Andrew, thanks for joining me.
Thank you, Justin. Nice to be here.
Yes, exactly. Nice to be anywhere these days. So you've had 2 bits of big news out. Bait Supply, JORC Resource and Reserve Report and final results. And we've got a long list of comprehensive questions from investors to put to you. So let's attack it. Let's start. Are you ready, Andrew?
I'm ready.
There's quite a few here. Okay. When will we know the minimum Mercuria will ask for as for off-taking each month?
Well, we've already announced that, to be honest with you. We've said that between 350 and 400 will be shipped early November from the October production. And moving forward, anything really over 200 tonnes will be accepted just on the copper basis alone. So it was really about the first one, and the reason for that was because the initial production is always a little bit lower quality, so we had to make sure that we maintain a minimum quality, which we've achieved, and that will go out sometime during the first part of November, and it's purely on availability of the shipping vessels that are selected by the buyer.
Marvellous stuff. Okay, and what is your response to the JORC results, above or below expectations?
Well, the JORC was fantastic. We're really happy with the results. There's a bit of a misconception in the market. We've had a lot of questions coming in through the information line. What I want to do is try and put to bed the fact that people don't realise that we've got 608,000 tonnes of new deposit, which is in the current mining area. Historically, all the resource that was mentioned under the Russian code that's up on our website is still stands. It still forms part of the exploration area. But the reality is we've now got this extra 600,000 tonnes on top of that 1.8 million tonnes. So the resources increased theoretically from 1.8 million tonnes to 2.4, and we've identified another 1.2 million tonnes. So now we've got 3.6 million tonnes. But the reality is that JORC has a strict set of guidelines, and you cannot include it in your measured indicator or inferred because it has to follow an audit trail. And that 1.8 million tonnes was derived many years ago under a different code. JORC is extremely strict. and you have to have your collars, your cores. You have to have an audit trail of your analysis, which assays, where the assays were taken from, so that the data sets that need to comply to be in one of the three categories of a JORC didn't apply to the historic code, and it's become more and more difficult to put it into code. It doesn't mean it doesn't exist, because from history tells us that the Russian code is actually more diligent than JORC, because they used to do a lot more work. However, it cannot be in there. So those old grades still stand, and this is just additional area because they didn't used to test the current area of mining historically. So we had to do it for ourselves to know where we're going next, where we are mining now, where are we going to be for the next 3 years. Because as a modern mining company, we need to plan our mining properly. It's not just hit and miss.
Marvellous stuff. Okay. In regards to bait supply, when does Vast expect to be cash flow positive?
Well, the reality is, and we put this into an RNS on the 7th of September, that from the first few months of production, as long as we meet those minimum targets that we've set out in those cash forecasts over the next 24 months, Waite on a standalone basis will be cash flow positive by itself after the second month of production. So that's a pretty phenomenal achievement for an asset that we bought for $600,000. We've held it for 5 years. The majority of the money's been spent since the license was granted just on 2 years ago. It's the anniversary the other day. We've put it into production in just over 8 months from when we got finance. And normally companies sit there and spend tens of millions of dollars on reports, hundreds of millions of dollars on infrastructure, and 10 years from production. So this is a remarkable achievement for the team, and we're extremely happy and with the asset we've got, and the potential is phenomenal.
Yeah. If possible, will full production be earmarked earlier than expected?
Well, that all depends on timing of the new equipment moving forward. We are, as I said, we put a conservative plan there. Full production is earmarked for, I think, May next year, but we're working on increasing that as we speak. They're still working underground and in the flotation, and it all depends on deliveries of new equipment, which would normally come in after the new year. If we can accelerate that, we will most definitely do so.
What percentage of BP has been JORCed so far?
Has been JORCed.
To
put it into context, it's just over 7 square kilometres. The area, which is Antonio North, which is a single skarn out of 16 skarns, they've mined down to level 17, although there is still a lot in the higher areas, because you've got to remember this thing's been mined efficiently. It's been going back to the 1200s, but since the 50s, where a cut-off grade of copper used to be 4% in the 50s and 60s, so there is plenty, and part of that other Russian code resource is sitting in the upper levels, which we'll go back to. But I would say that less than 5% of the mining area is the area that we're talking about with the potential 3 million tonnes or 3.6 million tonnes. So put it into context that this 600,000 tonnes over the next 3 years is a fraction is de minimis in the grand scheme of things. So the upside of Waite is quite phenomenal.
Yeah. The next question is, why didn't Vast do a full JORC? How much would it cost? How long would it take?
To do a full JORC, well, first of all, it costs millions and millions of dollars to JORC that area. So it's something that we'll do as we progress. We'll do it 2 to 3 years at a time. We're planning on doing the next 7 to 8 years after this 3 years of mining, starting in January. We're going to continue with the exploration program because the cash flow generation allows us to do so. But to JORC the entire area would cost tens of millions of dollars. That's why it wasn't done. So we've done what we've needed to be able to get into production and to know where we're going to mine for the next 3 years, which assists the drilling, assists with the refinancing possibilities. The JORC itself really doesn't have an impact on the finance. We're so advanced anyway.
Okay. You may have covered some of these off, but in regards to the JORC RNS, it states historical resources are downgraded. What does this mean?
Well, I think that was a misinterpretation of some of the shareholders in the social media. They thought that 608 was instead of the original 1.8 that was posted from the historic data. So it's not downgrading at all. This is additional grade. The that you've got to amortise that exploration target over the additional 1.2 million that is in the exploration area. So we've put those ranges in there, so it hasn't been downgraded at all. In fact, it's increased not only the quality, but it's also increased the quantum of the resource itself.
Yeah. Okay. And what is your expected NPV and market cap from this current JORC?
I mean, even if you look at the cash flows that were delivered on the 7th of September, and it shows that in 2021 it'll generate about $9 million in free cash, moving I think into just over 12 million for 10 months of 2022. So over 12 months, it's about 14.5 million of free cash. And that's without any higher grade, taking into account any higher grade at depth. So at 14 million on a PE of 10 for a European jurisdiction, I think the shareholders should be able to do their own calculations there. But we've done our own NPV models. Last December there was done one broker note given by SP Angel, which now will be revised now that the JORC's been published. So hopefully they're busily working on that. So, but our NPV models, just on what we've got in hand, exceeds over $100 million, and on a PE of 10 based on our cash flows, that's $140 million. But shareholders can do that math themselves. Okay.
Why has there been no RNS for first sales yet?
Well, we have RNS. We were RNS. The fact last week, I think that we are hitting our targets for the October production, and the shipping will be in early November. So the first sale comes. Effectively, what happens is the containers are stuffed. The analysis is done before the containers are sealed. It's shipped to port. Once it gets loaded on the vessel, we get paid within 24 hours. So it's all a matter of availability of vessels. So we're just waiting for our off-taker to provide us with those shipping details, and the shipment will be sold.
Excellent. In terms of Zimbabwe JV, will Atlas T2 and 3 still be used, or will refinancing cover this?
Well, the refinancing is specific for Romania, so it will only be to pay out part of the remainder of T1 Atlas, and for further exploration and expansion of Waite, and then we'll start looking at other projects. But at the moment, the focus of the company in Romania is Waite and Waite alone. And the Zimbabwe JV, we have the option of still utilising T2, T3 and T4 of Atlas. We'll address that when the joint venture comes. There are potentially other financing opportunities as well.
Okay. I don't know which part this refers to, but when do you expect the finance deal to be completed and cash in the bank?
We RNS that we're expecting a binding term sheet by the end of November. That was the feedback from the bank, that the final credit committee approval is going to be somewhere in the first week of December. We're working busily on documentation now. The due diligence on site has been completed. The bank is waiting for the final reports, which should come out somewhere in mid-November, so they can give us the term sheet end of November, and hopefully we'll be able to draw down during the course of December after that final credit committee approval, and we certainly hope that it'll be approved.
Yeah. Are you hoping vast connection with Mark speeds up processes in Zimbabwe?
When we put it in there, we knew that Mark is taking on a very, very important role in the diamond sector in Zimbabwe, and because he was the best man for the job, he is the best man for the job, which is why we took him in the first place. He's needed to assist in the restructuring of the ZCDC, so he went back there. As we've stated, he's welcome to come back when he's finished his mandate there. We do correspond with him, as he is now our counterpart towards the joint venture. I don't think that any conflict of interest is there. I don't think it'll speed it up. I think just his presence at ZCDC will speed up the process of joint ventures within the diamond space, because that was his mandate to do so. So I think that the connection to Mark is, let's say, it's not definitely not a negative, but he's doing his job with a full disclosure, and I think just the point that he's going to be doing his job is going to speed up the process.
In regards to the RNS for Manania, can you give a timeline on when you expect recommencement of production, and also work on, excuse the pronunciation, Kalibaba extension?
Well, Manaila and Kalibaba are the same mine. They're literally metres away from each other. The Manaila open pit is the one that we mined for several years, and that that's almost completely depleted now. The reason why we put it on care and maintenance is that, historically the plan was to put a plant at the pit from day one. The previous management decided they didn't want to invest in a plant because it was profitable. We first opened at the higher grades, at the higher levels. As we went deeper, the grade dropped and the costs increased. So when I took over as CEO, the first thing we did is we looked at it and said, we don't want to deplete the resource because it's still profitable if the plant was at the pit. We then decided to work on Waite as the main focus because of its near-term cash and because of the quality of the asset. And we will definitely go back to Manaila, but the priority at the moment is Waite. Once that's in full production, we're talking to third-party investors and financiers and private equity. Once Manaila can be financed independently on a standalone basis, whether it's with the current bank that we're working with now or another institution, that's when we'll reopen it. We're doing what we need to do from a policy of government to maintain the licence. We've just been granted a 5-year extension, so we have plenty of time to go back there, and we can renew it every 5 years as long as we can prove there's resource under the Romanian legislation. So it's still on hold, and there's no plan to reopen it in the near term. It's probably sometime next year or the year after.
Cool. Okay. Can you tell us more information on the financier and what the finance will be for and future plans?
At the moment, it is purely focused on taking out Atlas T1 and further capex and expansion in Waite to accelerate not only production but increase production, potentially increase the resource. There is the option there to extend that facility for things like Manaila and other projects within Romania, potentially Romania in the future if the legislation changes and the availability of those mines becomes to private investment. So there's a lot of opportunity there, but specifically at the moment, the first part of the banking facility will be for Waite and Waite alone, but with the option to expand and borrow further money subject to the projects that we're looking at.
Yeah, okay. When are you to announce new off-takers, zinc and moly? Question marks after both of them.
I mean, at the moment, the focus is on copper because it is the highest yield for the company when the second mine comes, even though we did start a zinc float to get it going because we're stockpiling that. Once we have a sufficient quantity, we'll probably end up doing as a spot deal or potentially to do an offtake finance to expand on the zinc lines as well. But we have no plans of selling the zinc before December as per the cash flows. And once we've got a decent quality, we're going to put it out for tender. We're talking to several off-takers at the moment. And we believe as soon as we're ready to sell the first zinc, that we'll sign up with an off-taker. And the same thing goes for molybdenum.
Mm-hmm. Has anything changed in Zimbabwe regarding the JV?
Not really. I mean, nothing's happening in Zimbabwe as far as new joint ventures, other than the government's become more proactive. I think with Mark being in the seat at the ZCDC, things will move relatively quickly, but you've got to give the man some time to get his thoughts together and restructure, which is what he's in the process of doing. So nothing's changed there, except that we're still very confident that we'll be proceeding with the community concession.
Mm-hmm. Did you miscalculate what was needed in regards to money due to the amount of placings?
No, not at all. We maintained budget for Waite. We didn't go over budget. The timing was an issue. We were 2-3 months late. COVID had a bigger effect than originally anticipated because we couldn't get Craig into country. We also did a management restructure within Waite, which caused a delay. And when you're in the process of building a mine at rapid speed, as I said, 8 months to restart a mine was quite phenomenal, and it's credit to the team, especially the local team. They've done a phenomenal job to get to where we are today. These things happen and they do cost more money, but putting it into perspective, that, as I said, when we spent $10-12 million, including acquisition and holding charges for over the life of the mine, to have a mine that's worth 10 times that and be cash flow positive within the first 2 months of commencement, I think, in the grand scheme of things, quite de minimis. I understand the frustration of shareholders, but to be honest with you, we've done a great service to the shareholders, including myself, who's invested quite a lot of money in not only shares but into the asset itself. And a 10 times return on investment is quite phenomenal. So we're not we wouldn't call it a miscalculation. We'd just say that it was necessary to get the mine into operation, which is the priority of the business to move ahead long term.
Okay, and this may overlap, but I'll leave the best to last, Andrew. How do you expect investors in the market to have faith in the board given the volume of placings?
I think the asset will speak for itself. Once it's in production and people see the quantum of earnings it's going to attract and the value of the asset itself, I think and I hope that all will be forgiven.
Excellent stuff. Andrew, good to chat to you, and hopefully we'll catch up in the not-too-distant future. Thanks very much.
Thanks a lot, Justin.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Charles Bray, Executive Chairman of Eastinco Mining, EM.P is ticker. Charles, thanks for joining me.
Good day. Good to be with you.
Yeah, and you've released news on a new appointment and a trading statement, so we'll dig into that in a bit. But as always, Charles, if someone's listening and they've never heard of Eastinco Mining and Exploration, please explain. There's a bit of a hint in the title there, but can you explain what it's all about, please?
Yes. We're an Aquis Exchange listed company that focuses on minerals in Africa. So the exploration, development, mining, and trading of minerals, in particular the 3 Ts, which are tantalum, tungsten, and tin. And we're focused in Rwanda.
Excellent stuff. Okay, well, let's start off with Simon Rollison. You must be glad he's come on board to, share your workload a little bit. So explain what Simon's going to be doing and his background, if you could, Charles.
Yeah, Simon's an excellent addition. He's had a tremendous amount of experience back in the day, in particular, operational experience on the ground with mining, executing, building wash plants, as well as optimizing them and doing exploration work in the field. His background's in geology, so he's well suited for that. And more recently, he's been involved in a number of AIM listed companies that focused on mining, and in particular in the CES area and Africa. So he's got a lot of experience with African operations and the trials and tribulations that sometimes come about in Africa in terms of logistics and supplies, but as well a tremendous amount of geological experience. So the addition's perfect. He's actually been working with us on a consulting basis for the past, just over a year or so. Mm-hmm. And so he has a tremendous amount of experience already on the 2 sites where we're focused in Western Rwanda, the Musasa or Kwaka site, and in Southern Rwanda, our Huey joint venture site.
Yeah. And okay, take us through what's happening at these at your operations there, if you could, Charles.
Yeah, at the Musasa site, we have completed our wash plant. We announced that several weeks ago. Been focused on the commissioning of that wash plant ever since. So just in case people don't know, but a wash plant basically takes a bunch of dirt at the front end and then segregates it into sand, mica, kaolin, and then ultimately, ideally for us, a lot of tantalum, a lot of tin, and at least in the Musasa site, a bit of tungsten. Mm-hmm. And so we are looking to put in, let's say, a ton of material in the front end and then get, say 10 kilos at the back end. But the key to that is because that plant costs a certain amount to operate every hour, is to increase that from, let's say, 9 kilos at the back end to 10 to 11 to 12. And that optimization is really important because it flows straight through to the bottom line. Mm-hmm. So we've been focused on that, and we will continue to focus on that over the next couple of months. Some of the issues we've run into are, as we switched most recently from optimizing tailings, we've now been working with the ore body itself, which is tremendous. It's been a very positive experience so far. But there are issues because you're throwing in a different type of material, so things get, let's say, bottlenecked at certain areas, and you have to change the dials and make sure that things can flow through properly. That's what's happening now at Musasa. Yeah. In Huey, to the south of the country, it's very exciting. We have a great partner who's really assisted us in terms of getting the various permissions to begin the exploration work. So we're expecting next week to begin literally trenching, and we have designs to most likely do about 12 trenches in one particular area that we find to be highly interesting, let's say, and prospects look good. So we'll start that before year end, and ideally get some real exploration work going in terms of drilling early in Q1 2021.
Yeah. And as far as, COVID is concerned, I mean, of course, the world is seeing a second wave in Europe and UK. What's it like there in Rwanda at the moment?
It's been really good. I mean, in terms of entering the country, the restrictions allow for entry for business. However, you do have to take a COVID test before entry, and then upon arrival, you have to quarantine for a limited amount of time while your COVID test is returned at post-arrival. So that's limited the amount of infection. I don't know the numbers offhand, but I would say that approximately 100 people in total right now are exposed to the disease or are infected. And the recovery numbers are a multiple of that. So it's very limited, but it is in Kigali itself. It's much less the case that it's in the areas outside of the main city. So the government's done a great job in terms of maintaining and keeping it under control. So it doesn't look like a lockdown is imminent there anytime in the near future.
Yeah, no, I was just looking at the figures here, actually, on this side. Total cases, just over 5,000. Total deaths, 35. That's amazing. Wow.
Yeah, it's impressive.
Yeah, okay. And so looking forward, Charles, what's the next, like a milestone you're hoping to achieve, just to reiterate to people?
Yeah, now that we've actually, we're surface mining the ore body, so the pegmatite we're processing. It's really about getting that to a regular sort of production number so that we can start to report to shareholders and the market about the production and the revenue that's going to result from that. As well, we're so excited about this exploration to the south. We're talking there, it's a 400, 500 hectare site. It has a tremendous amount of promise. And again, we're using the same sort of model where we have relatively low capital. We're a very lean company, capital deployed, I should say.
Yeah.
And then optimizing off the back of that. So, we're excited. What I look for in Q1 are some production numbers and an update and perhaps some preliminary results with respect to the mineralization at the Hue site.
Yeah, excellent stuff. Okay, well, as a reminder then, and if people are listening and like the sound of the progress what you're achieving there, but are not yet following you on Vox Markets, give them 3 reasons why they should hit that follow button, Charles, and add you to their watch list, please.
Yes. Number one, in Rwanda itself, we're understanding now that we have a very good first mover status. Due to a bunch of changes in regulations and rules over the past couple of years, the whole market in mining has changed, and there are very few industrial mechanized players, in particular with the 3 Ts. So we're in a very good position to grow from that and have made the necessary applications for licenses as a result. Number 2, we've just added some tremendous experience. Simon is an incredible individual and knows what he's doing. So at the top level, we've added him. At the operational level, we've just added a new general manager and are looking to make several more hires in the technical area to make sure that plant is running well. And number 3, we have a tremendous amount of growth potential, and it's only just starting to spring onto me, given the lack of competition from modern industrial type mining companies, that the potential for expansion and consolidation, working with the local players, is actually quite significant. And so we're going to be looking over the course of 2021 to strategically align ourselves with a lot of the smaller players to optimize our investment today.
Excellent stuff. Charles, it's good to chat to you, and hopefully we'll be catching up in the not-too-distant future. Thanks so much.
Yeah, as always, good to speak to you. Thank you.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Paul Hill, equity analyst and full-time investor. You all right, Paul?
Yeah, morning, Justin.
Do you know what? I think we've got ourselves a very interesting situation here for the markets and the way things are going. I genuinely think, and part of me, if I look on the fear side and buy into the fear and everything like that, then part of me goes, oh, it's a bit worrying. But when you look further, down the line here, I think this is opportunity right now. I really do.
Yeah, but I was just going to say, I was just waiting you to use the word buying opportunity, because this looks really, really attractive for long-term investors, because you've got quality assets now, which have been down 10% over the last 2 to 3 weeks. And really the fundamentals have improved for these businesses. So I'm with you.
Yeah. Well, do you know what? I mean, if you look at the risks are we can have further lockdowns. And but a lot of the companies that are decent are helped anyway by the schemes, and so if they're shut down, they'll be helped anyway. And as long as they've got decent balance sheets, it's fine. But I think if you look at the amount of research going on into COVID, science will win out, and even now, not in terms of vaccines. I'm talking about, I was watching, I got quite early this morning watching BBC, and there's so many trials of therapeutics going on, loads of them. And vaccine, like Pfizer's come out saying they can have readouts on data, within a few weeks. And it's as simple as this. As soon as the data gets to the FDA fast tracks and if they approve it, the dose is there, ready to go, in their hundreds of millions. So literally, as soon as they say yes, the FDA's passed, it's out of the factory doors pretty much, and it's to vulnerable peoples or frontline staff straight away. So as long as you protect that first layer of people, then we can start opening back up. And I think even the sentiment of a positive, from these vaccines will lift the market.
Oh, yeah, and also I think importantly too, on that political front about whether to actually implement lockdowns, I found it really quite interesting that the Scottish Parliament, who are pretty much, they're non-Tory, so to speak, and fairly liberal-minded, I mean, they started rolling back some of their restrictions on pubs and restaurants last week, even though they put a national lockdown. So what's happening is that the British public is actually starting to push back. The voters are starting to say to the politicians, actually, you're going too far, because we saw what happened in March and April, and we went into brutal lockdown, which frankly is the classic sort of using the sledgehammer to crack the proverbial nut. You would have thought 6 to 9 months on now, we would have come up with something a bit more innovative, rather than actually using this brutal cudgel just to beat everyone down in the same universal way. So in that basis, with the populace and the voters starting to push back, I can see actually that the politicians are now under pressure, not only to make sure that the vulnerable are kept secure, but also to actually open up the economy. So I am, I know it's happened in Germany, and I see it happened obviously in France as well. But I think, actually, we're not going to go into... If we go into a lockdown, it's going to be very short. And because of what you've just said in terms of vaccines, therapeutics, other treatments, we're easily going to get through it. It just becomes whether it's a political issue and how many voters believe what the government is doing is right or wrong, and whether they're prepared to support them. Because, I mean, the AstraZeneca, they came out with an interim, phase 3 report on Monday, and they said they were getting very good safety data along with very good efficiency data, and would protect the elderly and the vulnerable. So I'm with you, sentiment's going to change quickly, but I think just as importantly, the British public is frankly sick to its back teeth with having to use this cudgel, universal, one-fits-all approach of locking everyone down in their own house. It's losing people's votes.
Yeah, no, there is that fatigue, but I did have a bit of sympathy. I mean, I've literally, been of the same thoughts and persuasion as you. And I read an article on the BBC website about healthcare, and now they're going to have to manage, like last time, other people suffered. People who had cancer and all that suffered because basically COVID had priority completely, and then people didn't go to their checks. But now they're going to have to manage it. And so the second wave, if it gets big, and I was reading some of the staff accounts, NHS staff, and literally some of them are suffering big anxiety. And they said you can get all the equipment you want, but there's a lot of staff now don't want to go to ICU. They were so almost battle torn from the first time round that they don't want to. And I thought, you know what, you've got to protect the NHS.
I'm going to ask a provocative question here, Justin. Yeah. How many of the Nightingale hospitals are open?
No, I know that. They didn't say that. They were saying it's not about...
Don't butt the question. How many of them are actually open?
Well, I don't know.
None. We've got 40,000.
I know that. But what they're saying, last time, they literally cleared out the proper hospitals just to deal with COVID. That's why they weren't taken over. Now they can use it. It's not equipment. They've got that. Literally, if you read, and I can't portray it here accurately, but it's quite emotional. I was reading it, and there was several staff saying, "I don't want to go into ICU. I'll probably be asked. I don't want to. I can't." And there's people with anxiety having actually, psychotherapists help them, NHS staff. And literally, there's people not want to go back to work, and because they were working so hard last time. So, if anything, we've got to sort of, help in any way whatsoever, ease the pressure on the NHS staff. Because, and do you know what came back to me as well? And this bit of politics said, quite a few of them said, "Listen, I appreciate everyone standing outside and clapping for us, but the government has given us no, pay upgrade at all, which we would have preferred anyway, and we're working back to back, non-stop, and literally people are waking up in the middle of the night with nightmares, having this, so you work your hardest, do your best for some of these people in intensive care to die, and it affects you. You can't be a human and not be affected by it. So it's affecting the mental capacity of and health of NHS workers as well. So we don't want to go back to that. And I understand why then, if anything, we should try and suppress the wave a little bit. And I'm not for locking everyone down, and I'm pro-economy, of course I am, but I mean, I just read some of these personal accounts from our workers in NHS. I thought, okay, we've got to take this. We've got to take this into account. If you have a solution, Paul, right? You should be. I'll vote for you. I'll stand for Prime Minister next time.
In March and April, okay, we had an esprit de corps call across the public, and that was to bring people in, volunteers, people who had medical experience to help actually man the ICUs in the Nightingales, and it was amazing, the response. We got brilliant, response. And if the British public were given the choice, does it want to go down into national lockdown, i.e. and give all the mental health issues into the elderly population? Does it want to sort of cause children problems in terms of not schooling? Does it want to cause businesses and bankrupt people problems? Or alternatively, does it want to partially keep the economy open under some social distancing restrictions and have those people who are capable and semi-trained to go and man the ICUs in the Nightingale Hospital? If that was put in front of people, I would say we're going to get the same response as we did in March and April. People are going to do it because it makes perfect sense. So that I think there is a solution. All I'm saying is that we're looking at a one-size-fits strategy that, yes, was brutal and pushed the infection rate down at the start of the pandemic, but we should have moved on by then. I don't understand why we haven't got a bit more imagination. Anyway, I think I think that the big picture is that next year is going to be a lot better, okay? We're going to find a solution and we're going to get through whatever the outcome of the next...
No, I agree with that, but I also now, whereas before I was saying stop locking down, I just have to read an article, and it's personal accounts of some 5 or 6 NHS workers, and you think, God, I tell you what, they were literally in a war there, pretty much, for a time. And these are people working in ICU. I understand that some of the Nightingale hospitals weren't even used at all. But that's because essentially everyone was chucked out of hospital, and what led to the problem at the start was throwing the vulnerable people into the care homes who weren't protected, and then they had to come back in, and quite a few of those died and passed away. But it's worth reading that just to see the other side of it.
No, thanks for that. I appreciate it.
Listen, of course, I own shares in companies, and I'm thinking you can't stop. My father's got is a small business, and I'm saying you can't do this. And I'm looking at all the other effects, from people who are missing out on heart disease, cancer, across all kinds of operations like that. And I'm saying you can't do it because the fallout will be worse. You get businesses collapsing, you get depression, you get abuse from alcohol abuse, and you get domestic abuse, and all this follow on. I understand that, but I'm just saying if you read that account there, it gives you a sort of more of well, to me, I think a more balanced view, or the view from the other side as well. And I thought, okay, I understand. We still have to suppress the wave somehow. Maybe we have to use some kind of creativity, but that wave has to be suppressed before we get a vaccine, because the vaccine we've got to bridge that gap between that wave going up, peaking up, and that vaccine coming in. And I don't know how we do that. I don't believe locking down the entire economy works. Is the answer either. But we've got to be almost cognizant of the NHS workers there who face that wave.
No, I'm very sympathetic and very appreciative of what you said, because I absolutely agree that it's causing problems all on it. Anyway, well, let's move on. Let's not get bogged down in this one. Yeah, let's look big picture in terms of next year. And now there's one company, okay, that I came across this week. It just listed. It's a business on AIM, and I think investors should really put the slider all over it. It's called SourceBio International. That's ticker SDI. Now I interviewed, okay,
SBI, isn't it? SBI.
SBI, sorry. Sorry, that's my mistake. SBI, yeah. I interviewed the exec chairman, Jay Lecoq, this week, okay? And I know him from my previous investments. He basically ran Celsius, and I made some very good money off the back of it, and also Bioqual, and he did an excellent job there. So he's got a great track record. He's got a good management team here, and the board is full of experience. It's Chris Mills is on there, who's done this type of thing absolutely ball. Anyway, it came back on, and it's listed on Thursday, I think it was, at 162p, valued at around about 120 million. Okay. Now, what has really sort of piqued my interest, and also supports what we've just said, okay, i.e. that actually next year a vaccine is not going to be the silver bullet, okay, for everything on its own. It's going to be part of a solution, because not everybody is going to get effectively immunity on the back of being inoculated with a dose. There's going to be, because it isn't always going to be effective. It'll be effective probably 50-60%. Not everybody actually wants, a vaccine, etc. So there's going to be multiple strategies, i.e., such there's going to be a bit of self-distancing. There's going to be lots of continual testing, and there's going to be some therapeutics and other measures that we will do. So they'll have a sort of like a patchwork quilt of different solutions for next year, and we're just going to. And the British public, frankly, is just going to have every other sort of like disease and infection. He's going to have to live with it to a certain extent. Now, that scenario where you have multiple solutions plus effective vaccines plays perfectly into what SourceBio, International does. And the reason why I say that, the division that has gone from a standing start over the last 6 months, they've got a COVID-19 testing division, okay, which does antigen PCR, which is the gold standard testing. It basically tells whether people have got, COVID or not. And it's doing roughly, according to Jay, it's doing around 5,000 or 6,000 tests per day at the moment, which is a run rate of roughly around about £7 million per month. Okay. Now that gives a gross margin. I mean, I don't know, but I'm looking at sort of industry stats. I'm just 50%, let's say, for argument's sake. Okay. Now there isn't that much ongoing sort of like support costs, so a lot of that goes straight down to the bottom line. But that's just part of the story, because they've just IPO'd to raise money, and they're going to put about £6 million into expanding that capacity. And the aim is to get over 10,000 tests per day by the 1st of January. And Jay seemed pretty confident that would actually happen. And the chances is that they're going to be well above that later on. Now, if you just assume 10,000 tests per day, you get a sort of run rate in Q1 for an annualized run rate of £120 million or £130 million. I mean, it's an enormous amount of turnover, okay? And if you think about it in the context of the market cap of 120 million, you're looking at a business which is in COVID testing, which is trading at about 1 times COVID testing sales, admittedly probably peak sales, but COVID. And if you make, I don't know, let's just a broad brush assumption, they make a minimum, sort of 25% EBITDA margin on the back of it, and it's probably likely to be higher. But if they do, you're basically talking of sort of like £30 million plus of EBITDA. So it's like on a four times EBITDA on just one product, on the testing side. So I'm going to put it into the value category for a fast-growing business. Okay. Now the big question is, which I'm sure you're going to ask me, is what happens when we get a vaccine? Well, we just discussed this as such. So
what happens when we get a vaccine, Paul?
Okay, because we're going to still need testing. That's the whole point, because it's going to be part of the solution. If you want to go to a high contact area, or you want to go to an airport, or you want to go into sports arenas, you're going to have to prove that you're COVID free. Otherwise, you're going to pass it on to people. And on that basis, you're going to have to, people are going to get tested. And if you look at actually what the government's doing, it's going to lift its testing from roughly 300,000 to 400,000 tests per day, and it wants to go moonshot, which is 1 million a day. Okay. Now, this company is in the perfect position to expand that sort of like, production and capacity going forward. So, okay, irrespective of what happens going forward, there's still going to be tests. So this business has longevity, and it's being valued at, frankly, just on a cash basis. Now, that is not everything. Actually, what is also very attractive for investors, and this is what I'm basically saying, is that the testing business effectively justifies the price already, and you get the rest of the business for free, or the other way around, because if you actually hit, the existing business does around 20 million of turnover, but it's got long-term growth. It does what it does is medical diagnostics, and it does laboratory services. So it absolutely serves all the big biotechs, pharmaceuticals, government, etc., in doing things like cancer screening, genomics. It does drug stability testing. It does, you name it. It does on the pharma and on the drug side. So it's got this long-term sort of like move of greater accuracy, greater diagnosis, better treatments in healthcare, aging populations. That whole demographic should increase turnover, and this is what it's been doing and been faster over the last few years. It should increase turnover like 15% per annum. If you do that for 5 years and just assume, it goes from, top line goes from 20 million to 40 million. Again, 25% EBITDA margins give you a 10 million EBITDA. Now on a 12 times multiple, and that's quite conservative for this area because there's lots of barriers to entry, IPI, skill sets and all that kind of stuff. You get 120 million. So again, it underpins the current share price. So effectively, if you were being almost, I wouldn't even say bullish, but conservative. I mean, this is why, I haven't bought any because it's only started trading, but hey, this is right on my sort of crosshairs to buy. Because it's got a great management team, great technology. But you could easily see in 5 years' time, this share price could double. And that would absolutely not be an expensive price either, because and I want to increase my, healthcare exposure anyway on my portfolio. I've been saying that for some time. So all I would say is that I was very surprised that such a good quality company with an excellent management team was priced effectively at such a low level for this IPO. Admittedly, and I think the shares are up about 5 or 10% or something like that over the last couple of days, and I could totally understand that. But if people are looking like I am, small caps aim for lower risk, good value, quality management teams with excellent science and a bit of exposure to COVID-19, because I do not believe that we're going to get, it's a silver bullet, a vaccine. I think we're going to need testing going on, certainly in year 3, 4, 5, etc. These guys are perfectly placed. So yes, it comes down to your own personal view of how the future is going to actually pan out. But as we just spent the first 10, 15 minutes talking about it, in terms of the vaccine, it's going to be an imperfect world. And the population is going to have to live with multiple solutions. Testing is going to be one of them.
Yeah, it is. But what is important is, I think testing, is going to be important for at least 6 to 12 months, but after that, you've got to be a business that has other things going for it. And like you say, they do. So that's a good thing, isn't it? So,
immunity only lasts, and this is quite an interesting one. Immunity only lasts, we saw in the study, less than 6 months, definitely, okay? And that is it also, including the T cells. And I always assumed previously that actually the T cells, because you've got antibodies and then you've got T cells, when T cells give you the longer immunity. And I always thought if we can get a vaccine that stimulates the T cells, i.e. the AstraZeneca or Oxford combo, then we're going to be able to do 2 to 3 years. Well, actually what's happened in reality, when people have actually caught the virus, from our data and from clinical trials, we're saying the average immunity, regardless of the T cells, is still less than 6 months and possibly a lot shorter. So on that basis, you're not, and this is actually a bit of an eye-opener for me, you're never going to get herd immunity. You may never.
Well, no,
get
it's same as flu, isn't it? Flu season is pretty much 3-4 months. So you get a vaccine for that, but then it changes every year pretty much. And so so once you get a vaccine, but that's part of it, I suppose. But that's
that is a big factor to consider to investors.
Yeah.
The assumption that you will never get herd immunity.
I know.
That is quite a big statement.
Yeah, I know, but I think I know. Yeah, when I first heard that, I thought, well, what? And when someone said we'd never had herd immunity to a coronavirus, I thought, really? And I thought, and then they put in the context that it's like the flu or the common cold. Thought, oh, okay, I understand. Yeah, okay, I get it. And also, apparently, once you get some immunity, there's some people saying if you catch it again anyway, the effects become less and less. That's not as bad. You could sort of, obviously you haven't got immunity, but you won't feel as bad with it because you've had some kind of immunity. So it's anyway. Who knows? We don't know a lot about it, do we? But we know it's very similar to sort of flu in that regards. But I like them. Listen, we got limited time left. I've got someone coming up. Anything else to talk about?
Yeah, just a quickie then. I mean, basically, I think we've been talking about it for some time, but. Lloyds put its Q3 results out today, this week, and frankly, they blew the ball out the park. I mean, they had the CEO saying, it's a benign, loan loss environment at the moment. They came out with very good results, almost double what the market was expecting. Brilliant mortgage approvals, which is not a surprise because of the housing market.
It's doing well, isn't it? Housing market, yeah.
Yeah, and the share prices have hardly moved. It's still, net tangible assets is 52p. Shares are currently trading at about 28. And their balance sheet looks pretty much rock solid to me. I mean, if you actually look at the loan to value of its mortgage book, which is about 80% of its assets, etc., I think it's 43% when I saw it. And if you actually look at how much of that portfolio is in negative equity, it's 0.3%. I mean, that's nothing. We're talking absolutely nothing. And the house prices are going up. So my view is that if people again want to sort of like go to the big cap world, that Lloyds looks. I mean, I'm very happy to hold them. I've got absolutely no problem. I think it comes back to it's a buying opportunity. So out of the week, we're going to call call this one this call fairly short. I mean, I would say investors who haven't had a look at two stocks, put the slider all over. SourceBio International, that's SBI and Lloyds, because one big cap, one small cap. I don't own the first, but hey, I'm not far off.
Yeah, and I think Lloyds is one of the things. It's been bouncing along now on this sort of level for a while. It may see a bit more volatility, but I think, again, once you get that vaccine, we know stocks move ahead of the actual fundamentals, but I think they're one of those banking sector, I think, is one of those sectors that will rise on these vaccine good news, So, absolutely. Marvellous stuff. Cheers, Paul. Thanks for that. Speaking next week.
Yeah, thanks.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5. Open Orphan, up 7%, 26.75. At 4, Rolls-Royce Group, down 1.7 to 71 pence. At 3, Remote Monitor Systems, 1.5% to 3.3. At 2, Novacyt, up 2.3% to 10.34. And at 1, Zinnwald Lithium, down 5.7%. In fact, that's the new name, Zinnwald Lithium, for Eris Resources. The new ticker there is ZNWD. Had them on the podcast a few weeks back. All right, top 5 most liked RNSs are as follows. At 5, is that all? Interview with CEO of Gfinity. That's a cracking interview. Don't know if you heard that. Amazing interview. Really good. You should check that out. At 4, Symphony Environmental, launch of D2P and D2W enhanced drinking straws. Big deal that. They're antimicrobial and biodegradable. And very hot area. At 3, intelligent ultrasound. Volution Swift receives FDA clearance. At 2, extract resources, application to admission and total voting rights. Who's liking that? And at 1, Open Orphan, new 2-year contract with Tier 1 German company. Another contract there with a big company for Ven, of course, part of Open Orphan there, and well done to Kyle Friel and the team there. Check that out, voxmarkets.co.uk. Muchos apreciados for listening.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.